it's easier than ever to build a small widget for one outcome, but to me, like the signal has to come from the customer. Two co-founders that haven't brought on anyone just yet, or maybe just a few ICs, haven't quite cracked the can we bring in an A+ leader question of the company, which at the end of the day I think is a bigger mark of success than anything you can have product-wise by the Series A. Maybe a contrarian take, but I think the data moat at a Series A effectively doesn't exist anymore.
Tony, welcome to Venture Grounds.
Good to see you, man.
Likewise. You want to give a quick intro and tell us a little bit about Signalfire?
Happy to. Well, you know me, I'm Tony. Here at Signalfire. We're a multi-stage VC firm, and so that means everything from first check-in, pre-seed, pre-seed, through leading rounds to Series Bs and Series Cs. About $3 billion in assets under management today, with offices in San Francisco and New York. And I could give you the swim lanes that we spend a lot of our time in, but there's a lot of focus across the board on applied AI. So whether that means for healthcare, for fintech, for legal services, even for the trades. Anywhere that we think there's transformation in the labor market is where we're spending time.
Love it.
Yeah.
Okay, thank you. Let's dive right in. You mentioned on a panel that the Series A readiness signal is homogeneous use case across customers.
Yeah.
That's a strong filter. What else tells you a company has actually hit the bar beyond revenue or logos? What still trips founders up when they think they're ready?
Yeah, I think it does. The number one thing is and you're referencing a panel where we were talking about when is a founder ready for their Series A? And to me, it's multiple customers, and that means different things depending on the industry, need to be using your product for a similar use case. And so, it's easier than ever to build a small widget for one outcome. But for example, with healthcare, if you're working with 3 health systems using the same product on similar types of pain points, that demonstrates that you've really cracked the problem, and it's an early side of product market fit. For smaller ACV industries, like maybe the trades, maybe it's a few dozen. But to me, like the signal has to come from the customer. Otherwise, I think as VCs, we're kidding ourselves if we're overly rotating on what product features have been built. But I think the other piece that I'd say is the people funnel needs to be ready. And so 2 co-founders that haven't brought on anyone just yet, or maybe just a few ICs, haven't quite cracked the can we bring in an A+ leader question of the company, which at the end of the day I think is a bigger mark of success than anything you can have product-wise by the Series A. So for me, it's customers are using the product in a similar way, and you've demonstrated that you understand a talent funnel and how to bring in A players and build a killer team. And obviously we're here to help you do that, but the founder has to have some of that instinct as well.
Yeah, love it. That's awesome. Founders say the market feels like seed is the new A.
Yeah.
Bigger rounds, higher expectations, longer wait times. Do you buy that? Has AI raised the proof bar or just shifted what early progress looks like?
Yeah, it's a good question. It's funny because I hear that sometimes from founders, and then you talk to VCs, especially if you get a drink, and the opposite gets said, where, okay, like seed is the new, seed the new pre-seed, right? Like there's no proof points, and we're being asked to jump in with very little to buy in on conviction. And I think the way to square that difference is right now we have a tremendous amount of FOMO, but only around a few things, right? If you're building if you are coming out, for better or worse, I think, unfortunately, there's a consensus resume that's able to raise extremely easily, well ahead of traction. And nothing against these places, but you do have founders coming out of places like Scale and Palantir and OpenAI, and with the right sort of pedigree, VCs all find consensus and they all want to back you at a crazy valuation and mark you up quickly, almost before you have a product.
Yeah.
Whereas if you're not focusing on a model category or applied AI in a really clear industry that's become consensus, I think it is a real slog, and you'll find that VCs aren't responding for a long time and not coming to conviction. Because they're spending so much time chasing the more consensus categories. And I think that's sort of, there's a place for that, right? Those founders I think will be great, but I think we've got to be able to, find people working in a broader set of problem statements.
Signalfire argued that applied AI is shifting from model scale to data specificity, that the next defensibility is in expert data loops, not bigger models. What does that mean for how you evaluate new companies now? What does a real data moat look like?
That last sentence is a big question. What does a data moat look like in 2025? And it's important to call out, we have never really invested quite right at the model layer, right? We have been focused on where the applied AI meets a business use case. And I think more than ever right now, the question is, can you aggregate enough action data and like state data about how humans interact with the software and the machines that they're using today in order to train a new kind of model. And the natural first use case for that was always coding. And so you do have, right, the Cursor and Windsurf of the world that have done the PLG approach to start aggregating a ton of data. And we'll see how, Cognition and Cursor trying to build its own model, how that works. I don't know how many other PLG use cases there are that will gather that kind of data at scale. There's some interesting marketplace approaches, but I think what's more interesting now is in order to get that data, it doesn't exist anywhere, and so you have to be able to get hooks into the enterprise to generate it. And so the question is, as it sort of ever was, is on pace of execution. If you're building in the insurance space, can you get into the large national carriers and the big...
How do you sell into them?
How do you sell into them and get down to the end user IC level at those organizations, which is many levels of implementation deep.
Long time, yeah.
Super long time, and start getting clickstream data, integration data, in the way that you do where the engineer cuts out the middleman for Cursor and just downloads it and starts typing stuff. How do you get down to there? And a lot of that has to do with backing founders with industry expertise or industry insights, or just that killer instinct to get to deals and get to implementation fast. So I think more than ever, this will be maybe a contrarian take, but I think the data moat at a Series A effectively doesn't exist anymore, at least right now. And it's really about pace of execution and demonstrated early signals that you're onto something.
Love it. Thank you. You've been AI first as a firm for more than a decade with Beacon. Beyond sourcing, where does it actually change your conviction process? How do you know when the data is showing a real pattern versus noise?
Thank you for mentioning Beacon. Beacon is, as folks might know, if you look up SignalFire, it's the operating system on which we have built the firm. And the thesis behind SignalFire was always that if you use, at the time the word was big data, and now we'll call it AI, at scale, you can identify talent signals, and that great talent follows great founders. And so if you look at where the top decile engineers are going, you'll find where a lot of the best companies are being built. But what we don't necessarily communicate as well as we should is it's actually much more of a tool for our portfolio. And so that same methodology of tracking great founders all around the world, tracking the champions that can be customers for you all around the world as they move, we've really built what is effectively Zoom Info on steroids. And so more of the value of Beacon is to help our portfolio companies scale. And it's part of our platform approach is we'll do some recruiting for you. We'll also give you the tools to be better recruiters yourself to supercharge your ability to bring those A players in and then find massive scale.
It's incredible. How do you keep engineers?
Yeah, we put out some. We had done some really great research on this. Some folks on our research team, and I think the hype doesn't keep people around, right? And engineers, everyone is smarter than they used to be about what their options are actually worth. And so, joining the really buzzy company that's trying to go public at $1 trillion valuation really relies on a personal underwriting of the potential above where you come in, which has always been the case, but I think people are smarter than ever. And so engineers are aware of, okay, am I coming in early enough? Is there really opportunity for me to grow here? And I also think it's not just enough for the marketing to be really good externally on the buzz. It's, am I working with a generational set of scientists and AI engineers, right? And so it's why founding engineers is so hard to hire for, right? It's you're trying to build that foundational element to attract everyone else as a magnet. But that's what we found in all the interviews that we've been doing that keeps people in those seats. It's building a talent magnet, and then it's building great culture. And so Tawny Kranz is one of our operating partners who authored the Netflix Scaling Culture deck, over 10 years ago now. And keeping great people in the seat allows you to have an institutional memory of culture that really solidifies it over time, and is what made Netflix an exceptional company, and hopefully our companies as well.
Love it. When you zoom out, what's the single shift you're betting on over the next 5 years, and what would have to happen for you to change your mind?
In tech. And I think there's a bunch. One that's been on my mind a lot is the enterprise like B2B buyer journey. So the way that everything gets procured, from services, software, even to some extent raw materials, for years pre-AI was the buying cycle was compressing because people were starting to do their own research. And so you have multi-decade trend where buyers, I need HR software, okay? I'm going to do some research on my own about what you offer. It's why you have everybody's website has case studies and all that on it. I think with ChatGPT and the rest of the LLM searches coming in, and the density of information that can surface from PDF case studies that might have otherwise been siloed and other places around the web, plus sort of bespoke solutions to allow you to see who's compliant, or things like trust centers, which allow you to front run your information security requirements checks. I think you're going to see an even shorter compression of the buying cycle where folks come to the market effectively ready to transact. And so you need to remove as many barriers as you can from the friction of your sales process to get from there's a demonstrated interest to we've signed a contract and we've gone live.
Yeah, connect with a person, close the deal.
Connect with the person, close the deal, implement. I think it's time to value. And at this point, you can get time to understanding in like effectively negative time, right? The person your buyer should already come to the table knowing what you want. That's what's going to make some of these, I don't know if it's a net new GEO player, right? These, who optimizes how you pop up in ChatGPT. That may or may not be its own category. It might, be the traditional folks, but that's massively important. The trust centers are massively important. Reducing friction for RFP completion. One of our company's Conveyor is doing that. It's a huge pain point for the enterprise. And then implementation. Once we get in the door, if we're a software company, you're paying us today on a 12-year contract. If it takes us till month 3 to start showing value, that QBR is going to be brutal. Yeah. And so how do we get up and running and live? And a lot of that's going to be agents, but a lot of it's going to be just learning new patterns of buying.
Yeah. Yeah, I mean, I think that's totally going to shift. I mean, the implementation process, 3 months, 6 months, how long is this going to take?
Yeah.
That's going to totally compress.
100%.
Okay, 2 narratives, billion-dollar companies being built with a couple employees, and then the other side of the coin of businesses getting them to a person as fast as humanly possible when they come in the door.
Right. Yeah, and so you're saying basically how do I square that?
Yeah.
I think there's a very future vision, and I'm not sold that it's in the next 5 years, which is agent-to-agent commerce, where you're basically saying, okay, I have the need, and I've used HR software already. So I need an HR software. There's a bunch of providers out there. What are the human-in-the-loop steps that I really need in the perfect world to get from I have that need to it's implemented and running on my system? I don't know. Right now, I need to figure out my internal stakeholder management and what are all the pieces that I am requesting from it, put it together, then do a bunch of research on vendors, then go out to those vendors, verify what I've got in that research, get pricing, understand how it maps to my stakeholders, then do security reviews, do RFPs, sign a contract, then go live, start to implement, integrate with all my systems, right? And that whole process can take like a year, right? Even for something as simple as HR software. So, and then don't get started on we need to change EHRs in healthcare or something like that.
Oh, yeah.
But so in the long term and in the utopian view, right, you have an agent-to-agent commerce where my agent as the buyer understands what my needs are, and your agent as a seller has all the information on what you do in some sort of verified way. And that's the real question, is how do we make it objective? Because the question is always, hey, we saved you 15,000 hours this month, doing, expense reporting changes for you. Yeah. Do you believe that number? What, how do you gain that trust? And so I think this question of can we get a standard for agents to speak to one another where buyers and sellers can at least form a marketplace such that the human enters the loop only for a very narrow purchase decision and a short conversation with a few vendors maybe on some things that might have offline data. Mm-hmm. That's a future state. What I think I'm hearing in the question is in the short term, you do need a human in the loop on go-to-market. I think that's 100% true. You get so much leverage, and I think that's the sort of billion-dollar company with one employee vision, is you get so much leverage on product engineering, on putting out like your SDR type function, right, in the near term. But right now, the goal still is to come to a relationship sale because we don't have the embedded trust in the enterprise, especially for agents selling on behalf of complex software products, right? We don't have the Amazonification of B2B sales. No. And I think over time, we won't get that, but we'll at least be able to have something that looks like, what's the equivalent in B2B sales of a product listing? We really don't have one, right? Because you're really complex solution selling. And at the end of the day, what you're selling is an outcome. And there's a pricing discussion to be had on should all companies start to price based on the outcomes they deliver. Yeah. But the problem with outcome-based pricing is you have to agree on what the outcome is. What's the standard, and what is the control case, and then what's the experimental case? Mm-hmm. And it's not like parametric insurance where I can say, well, was the wind 74 miles an hour or not, and you'll get paid out or not. Instead, it's, hey, did you get me the savings that I expected or not? And when we can establish a standard for that, and there can be some source of truth for those things, I think then you'll get agent-to-agent commerce.
Yeah. Incredible. All right, we're ripping to espresso rounds. What's one non-consensus view you hold about the current Series A market?
It's what I said earlier, which is I think data moats don't exist at Series A, and differentiation barely exists at Series A. And so really between products, like if you have a mild lead, it's really about the people that you're bringing in and the ability,
talent, culture, and then consistent customers.
Exactly. I think that those are the two things to look for.
Love it. What's one conviction about AI or data moats you've completely rethought in the last year?
I think that previously, maybe a little over a year ago, I was definitely in the camp that was concerned about value accruing to the model layer to the extreme. And that we were still investing at the application layer and worried, constantly a little paranoid that folks were coming for us. I feel pretty comfortable that within our portfolio and that some exceptional companies just around the ecosystem, that owning the customer and having a real deep understanding of their workflows allows you to be the one that delivers the most value. And you see that with Palantir, for example, right? But across applied AI.
What's the risk most of venture is sleepwalking past right now?
At the risk of throwing too much shade, I think there's this concept where you have a company that starts and they come out of YC or something and they're selling to mostly other YC companies and they're small ACVs, or maybe they're large-ish and there's sort of an artificial NDR because all the companies they're selling to are scaling really fast. And you have maybe an overfunded market in AI selling to a bunch of other overfunded companies where you have this sort of venture squared impact. And now you have like double exposure to something that we're not sure there's an underlying demand for. That concerns me, right? And the obvious one is the valuation run up. So I think if you scrutinize who the customers are rather than just looking at a graph with a bunch of numbers on it, you get a little bit closer to the truth. But that's the risk, I think, across the ecosystem is this venture squared, unsupported revenue. Yep,
the accelerator play, like every incubator accelerator is selling to each other.
Which there's such a need for those players in the system. Yeah. So it's on the Series A investors and the Series B investors to really scrutinize, like, okay, who's ready again for a real mature enterprise go-to-market motion and to be funded as such.
So you were brought on to SignalFire in 2021 as one of the first hires at part of scaling up the New York office. What has changed in the venture ecosystem?
Yeah, I'd say in the last 4 years, when I started, it was just me in New York. We've got now probably 10 full-time folks at our office, 27th and Broadway, swing by anytime. Come pitch us. We are now really seeing the ecosystem start to mature here in New York, where a bunch of venture firms launched offices here. Startups started to be more remote, obviously over COVID. And you have this sense in the broader macro dialogue that founders are headed to San Francisco to put their heads down and work, right? And that's where they do 996. But like the culture in New York is based around like finance and law, where 996 is not crazy, right? And it's not always consistent like that. But you have a lot of people here who are used to grinding like that. So I just don't think it's that different. So I think the narrative is true that San Francisco might be, staying in the office longer. Here in New York, like you have that culture permeating into the tech industry, and you basically have the adoption and the merging of those two things together. So the biggest thing that we've seen is companies that would have been historically a few engineers in San Francisco bringing on someone in New York earlier, because most industries, if you're not just selling to big tech, you're significantly closer to your end buyer here. You're going to learn more about them. You're going to meet a more diverse set of folks just out being in the world here. So I think that understanding and the leaning in of sort of a two-pronged core of the venture and tech ecosystem in the US has really started to take hold. And I think you have a much more of an appreciation from West Coast-based firms, much like SignalFire, that New York is incredibly, incredibly important as the financial center, really of the world, to have folks on the ground, but also to focus your time and effort in terms of building an ecosystem.
You mentioned it, like selling to tech in San Francisco, fantastic. But if you're selling to every other industry, New York is incredible for it.
Yeah. It's been unbelievable to watch it grow. We've brought on some unbelievable folks on this team here, and some of our team has moved out from San Francisco here because the opportunity is really starting to show itself. And we've obviously grown the San Francisco team quite a bit as well as the firm has scaled. But the opportunity is here. There's so much that you can do on the ground it's more green field, right? That's the other thing. I think there's fewer on the day-to-day basis tech founder get-togethers and dinners, and there's folks like Ro who are in the ecosystem helping put those together. Is helping mature
build
that over time. Absolutely.
Love it. Awesome. Well, that's it. Thanks for coming on.
Dude, good stuff, man. Always good to see you.
Likewise.